So, what is the difference between investing and trading, between being an investor and a trader? Now, if you are on this video, chances are you are either looking or interested in investing, but perhaps you are actually engaging in activities or thought patterns or mindsets and beliefs that will get you stuck in the trading hamster wheel that I actually don't recommend for most people. If you're brand new to me, my name is Susan McVeigh. I'm a business sales strategist and I help entrepreneurs just like you sell with more ease without the sleaze so that you can make more money, more impact while living your life of freedom and flexibility. And so, this is my money series that I am doing in order to increase and improve financial literacy because my background is actually coming from finance. And let's face it, you didn't get into business in order to keep working 24/7. And more importantly, it's how much you keep, not just how much you make, that actually makes a world of difference for your freedom, your flexibility, your income, and your impact. And while everybody else is chasing the passive income dream, truly passive income happens when you understand how to use a money system. Okay. Because when you work hard for your money or you work for your money, because not everything has to be hard, we don't want you then going and becoming a trader or a gambler rather than investing your money wisely. Okay, so we're going to go pretty quickly over three key components and they're all kind of blend into the next. So if you're on here live, say hello, let us know where you're dialing in from. If you're on here on the replay, do the same thing and make sure that you add your questions and your comments below so I can pop back in and answer them for you as we go along. So, a lot of times when you are getting started in investing, side note, this is not financial advice for you as the viewer or listener. Okay. This is for education purposes, and you will need to go and find somebody, hopefully, that can provide you with more specialized advice and customized recommendations based off of your circumstances, or you do it on your own. Either way, you're going to need to be armed up with some information that's going to help you to make the decisions that are most appropriate for you. If you do work with an advisor of any kind, please make sure that they're licensed, regulated, or accredited, depending on where in the world that you are, so that you can check to see that they are actually licensed, because most financial products are regulated. Okay. So let's put that caveat out there, a little bit of housekeeping, and let's dive in. So, number one, the difference between trading and investing, because oftentimes when we go into the world of investing and we want to move from just having our cash sit in a simple bank account, or worse, sometimes it's just sitting in your home, right? That's a story for another day. When you start thinking beyond just short term, one step, and we start moving into the realm of, I'm going to be an investor. And a lot of times, especially with the news headlines right now, there's a lot of stock tips. Where should I put my money? How do I make a lot of money? Should I be putting stuff into cryptos or NFTs or Web3? Like, you're looking at all these different business opportunities in terms of investments, right? Because you understand that when you're working for this money, you can put some of that money aside and have that money now grow. But are you trading or are you investing? And I'm here to tell you that most people are actually trading instead of investing. Number one difference is your timeline, your time horizon. Now, I will say that you want to assign your money into different lengths of time. So, as an example, if you're in your early 20s, it would be a really long time horizon, like far off in the future, when you're probably planning to retire. But chances are that for most of us, a short-term goal would be maybe going on vacation. It could be something that you're saving up for, something that you want to use your money for that is in a very, very short period of time. So there's natural ebbs and flows for when we pick certain goals and the money that's attached to those goals that will match a time frame that's either short-term or long-term. This is going to tie into number two, which is all about our mentality. Okay, so I'm going to kind of talk about all of them and then talk in and amongst them all at the same time. So number two, the key difference is your mentality, how you approach and think about the money that you're either trading or investing. It starts here. Okay. And there's some very distinct differences that I want to mention as soon as we get into number three, which is assets versus income, and how the investor versus the trader views the money. Okay. Because at the end of the day, you're having to put your money somewhere. You're either going to invest your money or you're going to end up trading your money, or hopefully you're not gambling your money. But unfortunately, I see a lot of people, a lot of clients, a lot of entrepreneurs, a lot of people in my life that are looking at money and gambling with it because of all three of these pieces. And they may not even realize. So a lot of times when you look at business opportunities, you may hear that, or you may, read on the page things like, this is not a get rich quick scheme. And yet, how many times as do your ears kind of perk up when you start hearing people talk about a hot money tip? Oh, I made a lot of money on this. Oh, this is how I made XYZ. So we're immediately alerted in certain situations where we're like, well, I don't want to be in a get rich quick scheme of any kind. And yet at the same time, by the same token, we are so eager to learn more about how people have made money, especially when it is quick, when it is fast, right? When it feels like easy money. There is no such thing as easy money, although it can feel easy to make the money. There's a difference. And investors know the difference because typically investors are in it for the longer term. Now, that's not to say that you can't invest money for short-term periods as well, right? Like for short time periods. However, you are going to go in with your eyes wide open, understanding that risk and return is 100% dependent also on time. The shorter the time, the more risk that you potentially may be taking on. Again, not financial advice. This is just giving you like what generally happens. Okay. So oftentimes what I see, and let me know if you've done this before, where you want to make as much money within the shortest period of time possible. And as a result, you are looking at these get rich quick types of opportunities. Your ears perk up when you hear people talking about, oh, I made a lot of money doing this or this. And you don't really think about what did it take for them to get to that point. Because when we don't ask the right questions, then we become a gambler or a trader. Okay. There's really not a huge, I'm going to ruffle some feathers, I know. Not a huge amount of difference, because a trader, and I'm not talking about a professional, okay? A professional, maybe we should backtrack. A professional trader is somebody who gets paid to make money every single day by buying and selling investments, okay? So the core thing that they're doing is the same activity. An investor is still going to buy and sell investments, but they are not doing it usually every single day, which means that your time horizon is not the same as a trader. Okay, a trader is really looking to open and close positions, typically short term. Okay, now that's not always the case. I'm using very much broad generalities here in order to paint a picture, because oftentimes what we end up doing is that we end up creating another job for ourselves if we're not careful, because we're coming into a situation where we actually want to be investing, but we're approaching it as a trader. We're looking at it with a very, very short time horizon, a very short time window, instead of expanding and really recognizing that the more time that we have in the market, the easier it becomes for us to recoup our losses and to take on more appropriate risk for what it is that we're trying to accomplish. And regardless of how much risk that you have taken on, chances are the more time that you have, the less risky everything gets in the long term. Okay. So with that being said, our timelines for an investor, the mentality of an investor, and how we approach assets or income for an investor, this is typically what ends up happening. An investor And again, I'm giving some very broad generalities. There's going to be individual ups and downs, which is why it's really important that you need to speak to somebody about your own personal situation and circumstance. The reason why I'm giving you this information is so that you are armed with the language of money. Okay, that is my term. The language of money is very important for you to understand because money is a system. And when you know how to work the system because you speak the language of the system, it makes it much easier for you to get the appropriate help that you're looking for. So investors typically are looking at a longer time period that you're willing to put the money in. And that means that you're able to ride out the ups and downs. Okay. So your risk eventually will start to lessen, even in stuff that is super aggressive. Okay. Again, not advice, just painting a picture. The second part is when you think about your investments from the perspective and the mentality of an investor, because you're looking long term, you aren't looking to make money immediately. If it does, it's a byproduct, it's like icing on the cake, but that's not typically the intent for an investor. Now, here's the caveat, because you're like, well, Susan, if I'm investing money, shouldn't I be making money? Yes and no. An investor doesn't go in thinking I'm going to turn around and make money right away. That's a get rich quick scheme sort of mentality. That is very much you're trading time for money. You're trading dollars for donuts sometimes, or dimes for dollars, right? You're really just, everything has to ride on what you're doing. To me, that is a trading mentality. Okay. Now, trading is a legitimate service. It is a legitimate area of expertise. I'm not knocking the traders because they get paid to do this every single day. They have a certain level of expertise and tools and things that help them to assess and gauge the risk when they're opening positions and when they're closing them out at the end of the trading day. Because most traders do not want to leave open positions because all kinds of stuff can happen. Okay. And it doesn't matter what the asset is, it doesn't matter what they're investing in. Typically, an investor is going to want to open and close because they're making money off of the trading volume. Okay. So it's a very different way, a very different approach of how they make money. Now, when you are an investor, you're also still doing some of that activity, but it's the mentality that I'm talking about. Okay. So the third piece that I talked about, which is assets versus income, because as you might be able to allude to, when you are a trader, you are focused on making as much money, squeezing that, dollar dry in the short term, day to day. It's very much about how much did I make today, right? So that is income focus. Now, remember that most traders are getting paid based off of their performance and getting paid based off of their, like, what's happening day to day. It's very cutthroat, right? And as a result, the better they do each day, generating a certain amount, it's not about holding an asset because most traders do not hold assets, okay? Now, here's the difference. An investor who also trades, okay, this is where it gets confusing. An investor will also trade, but they're not a trader. That's the difference that I want everybody to understand. An investor focuses on assets. An asset produces the income. So this is why the longer time frame. This is why you're not looking at things as if I'm going to get rich quick, right? So if you are investing in real estate, chances are you're not going to buy a home and then turn around and sell it the next day. It doesn't make sense, right? You might flip it. And for me, that kind of falls into a little bit of the trading mentality, but not always, okay? But again, it's going to depend on whether or not this is something that you enjoy doing and all the other pieces. I'm only focusing on 3 for this particular video. So the timeline for an investor is typically longer term. The mentality of an investor is looking at something that's going to return on the investment over the long term. And the third part is they're looking to invest in assets that produce the income as opposed to focusing on how much money can I make from this investment now. because sometimes you don't make very much money in the short term, but it's going to be a huge, huge win, either because it's creating dividend income, interest income, or just from the capital gains. And if none of these terms make any sense to you, go back and watch my my video talking about the 7 different income streams of millionaires. Okay, so I hope this was helpful. This again was to give you clarity in the language of money so that you understand the difference between some of these terms so that you can get into the mindset and the mentality of what it is to be a successful investor, because that is what's going to give you long-term financial freedom versus trading. You can still trade, but be very clear on the difference between those two activities and what you're going to get out of it as a result. You can do both successfully, but they're very, very different in terms of the outcomes and the goals and the intentions by which you are going into them. So I hope this was helpful. This is part of a money series that I'm doing here in order to increase financial awareness and financial literacy, because I'm on a mission to help create more female millionaires. And if you are on board with increasing financial freedom, increasing financial literacy, just increasing your wealth, and this is for you specifically. If you have somebody else in your life that you know would benefit from this, please, please, please go ahead and share this with them. Be sure to like, subscribe, ring the bell for your notifications so that you can catch the next video the next time I'm on here. I generally talk about sales, business, wealth, and entrepreneurship, and I can't wait to talk to you on the